We got started a little bit early, a little technical issues, but we're good to go now. So as people are joining in, I'm going to go ahead and share my screen. I'm going to go through just a little basic presentation. I know a lot of you are probably familiar with Quest. Some of you might be brand new to Quest. So just give you guys a little background of what we do before we get into our main presentation today. So again, thank you for joining us. Self-Directed Ira Saturdays, taking an hour out of your weekend to spend it with us. So thank you very much. So who is Quest and what do we do? We are the largest self-directed IRA custodian in Texas. We have about 20,000 clients across the country. So just because we're local to Texas, we still work with clients in all 50 states. We have about $2 billion, I think it's about $2.1 billion right now in assets under administration. And we have over 100 employees, and we have 34 certified IRA service professionals who are ready to ask or ready to help you with any questions you may have. And this is a really big point I like to bring up. We have $350 million in undirected cash. So that's $350 million that's sitting in our clients' IRA accounts, and they're looking for their next deal. So if you're looking to borrow money, definitely keep coming to our events, keep coming to our networking events. I'm going to talk a little bit at the end here about our grand reopening events. So if you're looking to borrow money, I highly encourage you guys to come to some of our events. Now, Quest does not provide tax, legal, or investment advice. So everything that you see in all of our classes, all of our webinars, all of the speakers we bring on, it's all for educational purposes. So always do your due diligence. Always check out the people you're going to be investing with before you actually get into any investments. Now, with that being said, what is a self-directed IRA? What do we actually do at Quest? Well, a self-directed IRA, it's just a marketing term. So you probably already have some sort of IRA or old 401k, 403b account that can actually move into a self-directed IRA account. So the main difference is with self-directed IRAs, you can invest in alternative assets. So instead of investing in the stock market, you can go ahead and invest in things like real estate. You can invest in notes, you can invest in multifamily, self-storage, a whole bunch of different stuff you can do other than just being in the stock market. So some of the benefits of having a self-directed IRA, number one, diversification. If all your money's in the stock market, you're probably not truly diversified. But if you have some money in the public side, some money in the private side, your portfolio is going to be much more diverse. The second benefit, which I think is the biggest one, is tax savings. When you invest in IRA accounts, all the profit comes back to the IRA, either tax deferred, or if you use a Roth IRA, completely tax free. So a huge benefit and something that you can use to grow your retirement account. Another benefit, which isn't probably talked about as much, but is nice, is social investing. So, if you purchase a rental property, for example, in a neighborhood, a rundown property, you fix it up, you get a renter in there using local labor, stimulate the local economy. You're really helping out your local community, and you're also benefiting yourself. And then finally, invest in what you know best. A lot of people might not understand or fully understand the stock market. You don't really know all of the stocks contained in your mutual fund that your 401k might be invested in or your IRA is invested in right now. But do you understand real estate? Do you understand multifamily? Do you understand lending? Do you understand purchasing land? Whatever your unique skill might be is what you can actually invest your retirement funds into. So some of the accounts we have here at Quest, we break them down into three categories: our personal plans, employer plans, and our specialty plans. So the personal plans, again, traditional IRA. This is a plan you probably already have: 401k, an IRA. We also have a Roth IRA account as well. Then we also have employer plans. So if you're self-employed, we have the SEP IRA, the Simple IRA, and the Solo 401k. So if you're self-employed or you have a small business, definitely give us a call. We'll see if one of these accounts works for you. And then finally, our specialty plans. So we have the health savings account. Our health savings account, as well as our Coverdell education savings account. So these accounts we call our specialty plans because you can start using them today. You can pay for health expenses or education expenses for your children today with these accounts. So if you are a Quest client, we have a full Quest portal, which is something we've really been working a lot on recently. So you can pay expenses, you can, upload documents, submit your fair market values at the end of the year, and you can even do a full investment process online. So you can purchase investment online through our client portal, which is a big feature if you are a Quest client. So as you know, we offer endless education. So check out our YouTube channel. We have about 300 or 400 pre-recorded classes on there currently. Check out our education center. We have articles, videos. Come to our virtual happy hour as well, first and third Wednesday of every month. So again, if you're looking to borrow that $350 million in cash sitting in our clients' accounts, I would highly recommend attending that happy hour event. And we also have weekly webinars. So every Tuesday and Thursday at 12. And of course, our Self-Directed Ira Saturday, which is what you're on now, every Saturday at 12. Now, again, I mentioned our networking events. This is our grand reopening. My dog is currently pulling the shade off. There we go. Nice. So our grand reopening event, August 3rd at 6:30 in our Houston office. Guys, we're getting back to in-person events. So the spots are limited. If you want to attend, it's next week. It's going to be free, free food, free networking, that type of stuff. Definitely scan that QR code right now. If you're in Austin, it's August 10th. And if you're in Dallas, it's August 17th. So I highly encourage you guys to come stop by. We are doing a rewards program right now. So if you move in money, you can go ahead and get the corresponding account fees there if you move in funds. So it pays to have friends as well. So we have a referral program. So if you refer a friend, you can go ahead and get some account credits to your account as well. We love having dogs. He's great. Guys, if you want to get in touch with an IRA specialist, you can go ahead and come to our live chat. During our business hours, we have an IRA specialist on there. It might be myself. Give us a call, 855-FUN-IRAs, and then also send me an email directly or email all of our IRA specialists. We also have Kurt Power. He's another IRA specialist. He's going to be on the class answering any questions you may have. So I'm going to stop sharing my screen, and I'm going to bring in Scott Meyers, okay? Scott is a self-storage guru, okay? He's considered, one of the go-to self-storage guys in all of the nation. So Scott is going to be talking about the changing market and, maybe some investments you could get into with your IRA account. So Scott, go ahead, share your screen, do your thing, and we'll have a quick Q&A at the end, guys. So please put your questions in the chat box.
All right. Fantastic, Evan. And thank you, Kurt and the gang. Juan, if you could, or if anyone could, let me know. Can you see my screen now first before I jump in here and get too far down the path? Hello, anyone? Evan? Kurt?
Yeah, we can see it.
Beautiful. All right. Thanks, guys. Well, glad to be here and glad to be back again with Quest Trust with a recent name change and but all the same great players. So thankful to be on here. And guys, we work with a lot of folks that are in the self-directed IRA space. We syndicate a lot of projects and bring in a lot of capital partners that are using self-directed IRAs. And I can tell you, not all custodians are created equal. I can say that with 100% confidence. And to be quite candid, Quest is doing this better than just about anybody else. Yes, they have done an extensive amount of work on their back-end portal. And that is just a testament to their ongoing goal to improve. I almost said quest to improve, but goal to improve. And I'm not being paid to say that. I'm thankful to be here, and I am thankful to work with them because they make our life easier. Because when we bring on our self-directed IRA partners, Quest makes it very easy and very seamless. And the integration between our companies has just been phenomenal. So with that, guys, you have hit your wagon to the right folks. So indeed, what we're going to be talking about today is, my favorite asset class, and that is the asset class that I've been investing in for 15 years, and that is self-storage. I've invested in homes and apartments and office buildings and parking lots and warehouses and virtually every asset class, and I haven't found anything that really beats self-storage. And if there is an asset class that begins to outperform it, trust me, I am not married to self-storage, but I have not seen a better way to invest in real estate than self-storage, bar none. And so that is why we invest 100% in it. So what I plan to do today is share a little bit. In an hour, I can't share you everything that I've learned over the past 15 years and everything that we do in self-storage. But more importantly, since most of you are investing passively, I'm going to hit on the highlights of self-storage and why you should be looking at this asset class if you haven't already, or if you're not already investing in self-storage. And then we'll have some time for Q&A at the end. So don't take my word for it. I am of the opinion that, and nobody's going to change their opinion based upon what I say. And so I tend to, for the reasons why I got into self-storage, I tend to look at logic. I tend to look at the facts. And that is why I got into self-storage as well. And if you look around, you'll see a lot of those facts on the internet and elsewhere in terms of the data and the statistics pointing to self-storage and how and why it's doing so well right now. Real estate investment trusts, Extra Space is one of the fastest and is also the fastest growing REIT in the country right now in real estate investment trusts, because it is investing in self-storage, which is very recession resistant. A lot of eyeballs have been on self-storage in the past several months, and including, well, going back to last year in the beginning of the pandemic, where investors are moving into self-storage units. Now, not literally, they're not moving into, because that is illegal to live in a self-storage unit, but you get it. They are investing and moving their funds and directing their dollars into self-storage investments. And that's because self-storage is doing extremely well during the pandemic, doing extremely well in terms of heading into a recession, and just as we've done in every other recession prior to this. Self-storage not only survives COVID-19, but we have outperformed all other asset classes during the pandemic. And as we head into the next recession, we know what happens with self-storage, and that is very inflation resistant as well as recession resistant. And I'll touch on that a little bit later. But Brian Somoza of JLL Markets, again, looking at the data, the stats, and somebody who's been in the business for a number of years, bottom line is the stuff market, as we call self-storage, people putting their stuff into units, never crashes. And that's because during a recession, businesses and individuals will downsize and their extra stuff goes to storage. Private lenders then pull hundreds of millions of dollars from Wall Street because they see that, well, as we head into recession, the stock market typically does not do very well. And what we see is people running into hard assets, and this is the asset class that benefits the most. We also have this perfect storm right now where we are at the top of the market in terms of existing facilities. And so these sellers, many of the mom and pops and some of the even medium-sized players, and folks like myself, are also selling some properties off, a few select properties that we've created a lot of value in because we are at the top of the market. And so storage is also essential, which means that we never closed down during the pandemic. And once again, it consistently outpaces all other asset classes. And so that is why when you look at Green Street Advisors, as they track all of the forms of commercial real estate, that what came out on top, the asset class and the sector of the economy and the sector of commercial real estate that came out on top during the pandemic was self-storage. Medical offices didn't fare so badly either. Single family rentals did well. Life sciences, apartments, office, strip center, manufactured homes, and then obviously you see lodging and senior housing a little further down, and gaming, meaning all types of casinos, didn't do well during the pandemic, but self-storage has come out on top. And the reasons that we've seen is that as we headed into the pandemic last year and we begin the lockdown, first of all, colleges were the first. They shut down immediately. And so rather than putting things in temporary storage and then putting them back into the dorm rooms, or depending upon what was happening over the summer, immediately everybody took everything out of their dorms and then they put them into self-storage. And so we had a huge rush all at the same time all across the country. So another boost to the occupancy in self-storage. Then we had businesses that some during a lockdown, they just went off a cliff. They closed their doors immediately. And so their excess inventory and goods and furniture, anything that was left of the business, when they moved out of their operations, their offices, or wherever they were holding their business, they went into storage. Everything else went into storage. Then when offices were shut down, in most work environments, not just offices, you have an income earner, sometimes two in a household or more, that have come home and they have to set up an office in a spare bedroom, in the living room, family room, dining room, basement, wherever that is. And so they had to clear out this space. And well, most folks, they use up every single space in their home. That's just what happens. We just fill it. Trust me, we know this. And so that stuff had to go to storage to make room for these offices for the wage earners, and let alone school as well. When kids had to come home from school, we had to set up a mock classroom as well. So all of these were a perfect storm for self-storage, plus the fact that we are an essential business, therefore it never shut down. And as I'll talk to you about in a moment, we have set up within the storage industry over the past several years the ability and the means and the way for consumers to rent a unit without ever coming into contact with a person or into the storage facility by way of a cell phone, by way of a website, or like a Redbox rental through a kiosk. And therefore, they could rent a unit and move in without ever coming into contact with a person. So you could say that we in the self-storage industry, we have been touchless and contactless before it was cool to be touchless and contactless before the pandemic. So our industry was already poised. We did not miss a beat, and we were absolutely 100% prepared without having to prepare for what happened during the pandemic. So therefore, self-storage has benefited greatly. We as investors, developers, syndicators track the stats on the industry and obviously our own facilities on a regular basis. And Yardi Matrix is one of those data gathering sources that is pretty much the gold standard in the industry. And so in their monthly reports, just to get everybody up to speed, this came out a couple days ago. I thought I'd share with you the national occupancy in self-storage right now, average is 92%. Which means that most facilities are full with a waiting list, and we're seeing and this is of the bigger companies, even of smaller companies like ours, we're seeing greater increases in rent, but on average, 12.7% year-over-year increase. This is for a 10 by 10, climate controlled and non-climate controlled all across the country. Miami alone and the Florida market and some of the other areas in Texas where many folks are moving to. The hotter markets, if you will, in the states in which you're seeing the most growth, 21.4% in Miami alone. That is year over year. And we're seeing here, even in Indianapolis, in my hometown, we're seeing a 15% month over month increase. And so for all the increases out there, there's a whole lot of folks, maybe the mom and pops and others that are just steady with their rates. But all in all, to see those types of increases is very encouraging. And we are obviously seeing the benefit of that. And the fact that construction is slowing as we head into this recession, and with a shortage of building materials and some of the other challenges right now, that we're seeing a slowing of new projects coming into the marketplace and into the pipeline, which means demand is strong. Rates are only going to get stronger as occupancy grows. And so that only means good things for us in the business. So indeed, I have, this is the asset class that I've chosen. I've been in this business for 15 years. I started out in real estate in 1993, buying single family homes, got into apartments, had about 400 of those. And then again, got into other asset classes until I found self-storage. But now this is all that we focus on. And since 2005, we have purchased, we developed, we convert buildings, grocery stores, and other vacant big box retail into self-storage. And we have over approaching 14,000 units. I think 13.8 is the last count. 14,000 units and 2.4 million square feet of self-storage. And we do this nationwide. We're in 19 states, I believe now, that may have increased as of last week. And I regularly speak for and write articles for and do a lot of work with the Inside Self-Storage Association. They have trade shows, which I was a speaker just last week at their large trade show, the Self-Storage Association. And along the way, being involved in multiple investor groups, we started our own education organization. Really just started by holding a workshop and then a home study system because so many people in my hometown wanted to take me out to lunch to pick my brain. And then after several people were doing so, and I obliged, and then they wouldn't even pay for my lunch and then never went out and did what I said, I decided that we needed to find a better way to teach people that want to learn about the business, because there wasn't any resource out there at the time. There wasn't a person like myself or a company like ours to teach people. So we founded selfstorageinvesting.com, which is a company that educates and consults and teaches people about the business. I'm a member of the Forbes Council. I write on self-storage. I'm their self-storage writer, if you will, covering all events in the self-storage industry because it's such an exciting industry. But in all fairness, and joking aside, the industry as a whole there's a lot of eyeballs on the industry right now. It's pretty exciting. I only say that tongue in cheek and smile because my family and friends say, how do you get so fired up about these garages and metal boxes on concrete slabs? But you know what? It's the income they produce and the lifestyle that's provided for myself and the thousands of others that we've helped along the way. That's what keeps me smiling, and that's why I'm so excited about this industry. Also, the reason why we do what we do and why we work so hard, we got a number of businesses and we got a number of projects that we're always working on. And that's because my wife and I, when we established our business, it was not only to create a lifestyle so that we could raise our kids and be involved in each other's lives, but also so that we could spend time on the mission field and to give back. And that's what we do. We have a team of people that helps us to do what we do, to leverage our time so that we can do the things that are the most important. And that is, again, to spend time with our kids, and then also to spend time on the mission field. And we take 10% of our profits in our education business and our investing business, and we put it in a pot. And once that pot gets big enough to build a house in Mexico, then we will also take whoever wants to go along with us on these trips for free. So our business associates, our family, our friends, coworkers, staff, vendors, virtually anybody who has an interest in going on a short-term, family-friendly mission trip for 4 days down to Ensenada, Mexico, which is a resort town about an hour and a half south of the border, south of San Diego. We will take them. We will take you. If you want to go, you just need to pay your way to California. And so we are now building roughly 6 houses per year. Started out with one several years ago. We'll be building houses 18 and 19, I believe, coming up this Thanksgiving. And that is at the heart and the core of what we do, and is our mission as a business. So let's talk about now getting back to the business. What I wanted to cover today is some of the myths and the truths about self-storage for some folks that are on here that just aren't too familiar with the industry. And like myself, as I got into the business in the beginning, I thought, well, this seems to be just a niche, part of commercial real estate, small part of commercial real estate, or it seems like to be a franchise business, because all I see are the public storage facilities, U-Haul, Extra Space, Life Storage, CubeSmart, but I couldn't have been more wrong. There was a study that was done by the National Multifamily Housing Council, and they track all the rental forms of real estate. So investment style real estate, that pieces of real estate that people buy and then they rent out. And they found that there are roughly, and again, moving target, there's no way it changes. It'll change today with all the closings. Roughly 16 million, single family rentals out there across this country. Obviously changing all the time, and ebbs and flows. Roughly 21 million apartment rental units that are owned by, those are individual units that are owned by investors that are rented out. There are roughly 1.4 million mobile home rentals. Yet what shocked me is that there were roughly 25 million plus self-storage individual rental units out there all across the country. Yet I hadn't heard much about it, didn't know where to find them or anything about the business when I began looking into it. And what I also thought was, if I decide to get into it, how do I compete with all the big guys? Because that's all I see as I look around. But what I found is very quickly, the numbers didn't lie. First of all, there was more opportunities to invest in more units than the other asset classes I was already investing in, houses and apartments. And also that a myth to me was that the rest of these facilities, most of the rest of these facilities that are out there, besides the one I saw, meaning the big guys only own 9% of the industry and the square footage and units, that the rest of it, the roughly 22.8 million, was owned by mom and pop, small time investors. So the same folks that I was buying my single family houses from, my small apartment buildings from, and other small pieces of commercial real estate. So same opportunities, talking with the same types of people, using the same tactics, and just building those bridges and relationships with those folks, now just looking at this different asset class. And so as I begin to look around, as many of you may have as well, I thought, gosh, it must be saturated, the industry. All I see are self-storage facilities everywhere, and I see them building everywhere. And that's the same to this day. As a matter of fact, 9 million units have been built in this country since the year 2000. It's been the fastest growing real estate sector for 39 years straight. And we've been building more commercial real estate, building more square footage of self-storage than any other asset class. We've seen 65% growth in the US since 1995. So you may be saying to yourself by now, well, isn't it saturated, Scott? I see these things going up everywhere. But that's, folks, because I'm a developer just like all the others, and we don't build these for fun and just hope that they fill up. This is based upon feasibility studies and meeting the demand. We see that occupancy is between 92 to 93% across the country right now. And it's being driven by the fact that this is really a consumer product cleverly disguised as real estate. And that's because 1 in 10 households rents 1 or more self-storage units. And that you can drop me into almost any market in the country, and you'll find that is a common statistic. It's right at 1 in 10 households uses 1 or more. We're at 93% occupancy nationwide, and there's 100% occupancy in many of the hotspots. So the hotspots, I guess I should just put what it is. The hotspots are really just the 100 biggest major metropolitan statistical areas in the country are basically full with waiting lists. So what is driving all this demand in this country? Well, I think there's probably a lot of things going through your head and a lot of answers because we're a nation of renters and hoarders. You'd be correct. We are the hyper consumers of the world. That is correct. But let's drill down into that. And basically, it's the baby boomers. So the baby boomers over the years, if they have done well and they have retired well, then they have perhaps if those that live in the north, they have a place in the south, or vice versa, a place in the mountains. They have one or more units in multiple areas of the country because when their primary residence is vacant, they put their stuff in storage as they go and travel to their summer home or their winter home on the way back. Now their vacation rental, when they're not there, they're going to lock their items either in a closet, like many Airbnbs that you may have stayed at, but many times their toys, their bicycles, motorcycles, anything that's motorized, anything that is valuable, even in temperature controlled units, they'll put their good booze and sometimes food in there until they come back down again, so they don't have to go out and buy it all over again. So that is the one or more self-storage rental units. Also, baby boomers, as they get older in years, they downsize when the kids go out of the house. And so their extra stuff goes in storage. There's still extra stuff that they want the kids to have or that they want, and they just don't have room for. Then as they age, they go into assisted living and they downsize again. And then beyond that, well, the next step is typically, hopefully the pearly gates. And what happens at that point is once our loved ones pass on, we have an estate sale, everything's settled up with a will and last will and testament, but there's still some items left over, either things given to the kids or things left over that the kids feel too guilty to get rid of. So rather than putting it in their house because it doesn't really go, or they don't like it or want it in their house, it goes into storage. And many times it'll stay there for years because it's easier to write the monthly check or let it ride on their debit card than to figure out what to do or sell those items. The old big green couch that nobody wants to get rid of, but we all had our family pictures taken of, or the old lawn tractor because we may need it someday, whatever those are. And so year after year after year, they pay for those units, and we are the benefactors of that. And now, before you think, okay, well, that's great. What happens when the baby boomers move on? Because the millennials are typically minimalists. And for that reason, we are actually seeing a doubling in demand of rental by demographic, by that segment that is considered themselves as millennials, because millennials, they are minimalists. They want experiences versus stuff. However, in their quest to have experiences and a fluid lifestyle where they can travel whenever they want, whatever they want, if they don't have a professional career that has them tied to a 9 to 5 and only 1 or 2 weeks of vacation, they may work for a while or work on contract and then save up enough money to go off and vacation for a month or 2 or 6. And so they let their lease go in their apartment, or they've sold their house, or they have a tiny house. Maybe they're still living at home or with friends, family, relatives. And so they put their stuff into storage while they go off on their adventures. And then they figure out where they're going to go and live next time around. Or if they happen to have a regular job, 9 to 5, I shouldn't say happen to, but those that have a regular job, they still want experiences over stuff. So they have a smaller home. They don't have a yard, apartments, condos, whatever that looks like. But their adventures come by way of mountain bikes and kayaks and other things with motors, jet skis, boats, you name it. And those all don't fit in a tiny house or in the parking lot of an apartment complex or anywhere else if you're sharing a home. So those all go into storage as well. So we're actually seeing, again, a doubling of demand and uptick of rental units by the millennials versus the baby boomers. So rest assured, the self-storage industry is in good hands with the next generation that is coming up. But this is the main reason, is because for those of you that said that we are a nation of renters and hoarders, you are correct. And if you happen to be someone who uses storage because you just don't feel the need to purge and you just kind of like stuff, not that you're a hoarder, well, then I thank you on behalf of the industry. All right. So myth number 3, self-storage facilities are cash cows. Well, I've heard that as well when I begin looking into the industry, but I am a real estate math guy and I don't go based upon what I hear. So when I begin looking into the industry and begin comparing apples to oranges, indeed, when you look at self-storage, is most commonly compared to other asset classes, but most specifically apartments. And so many folks interested in investing in apartments. I was investing in apartments, but when I begin to peel back the onion and look at the difference, here's what I found. Apartments, on average, it says the Multifamily Housing Council gets roughly $1.02 per square foot per month across the country. Self-storage gets roughly $1.12 per square foot per month across this country on average. Both of these rentals for each is a little higher in some parts of the country, a little lower in others. And again, these stats are from the National Apartment Association and the Self-Storage Association, the National Association. Apartments, on average, also have roughly a 49% expense ratio, where self-storage has an national average of a 31% expense ratio. So that's the biggest difference. So when you take a look at the numbers, first of all, you might be thinking, why on earth would anybody pay 10 cents more per square foot for storage than apartments? Where apartments have, indoor plumbing and carpet and drywall and, HVAC and everything else. Well, the same reason why the liquor industry does so well, and bars rarely go out of business. And that's because in a bar, they buy by the gallon and they sell it by the shot. We build it by the gallon and we lease it by the shot. So anytime that you chop it up and sell it for less, if you were ever to add up the amount that you would pay, for those of you that take shots, buy shots, that you pay in a bar for a shot, if you paid by the ounce, that same amount for the bottle at the bar, I think you'd be shocked. But we do it, right? And people do it for storage too. If they don't have the room, it's the least expensive way without having to go out and buy another house to be able to store their extra stuff. So it isn't a myth. Math is simple. 10 cents more per square foot, and we got an 18% lower expense ratio. Yes, self-storage facilities are cash cows. And that's why the Wall Street Journal, Howard Gold, one of the writers, says, forget about stocks. You should build your nest egg with self-storage. Guy writes for the Wall Street Journal. Forbes magazine, how humdrum self-storage became the hottest way to invest in real estate. So not only outpacing Wall Street, but outpacing all of the real estate asset classes. The Express Wire shows a 134.7% growth projection through 2024 for our industry. And again, I am biased, but I do write for Forbes magazine, and I write based upon the facts and what we're seeing in our own portfolio, as well as in the industry, and for reasons that investors are looking at the self-storage industry right now. So I wrote that article several months ago, and it is still true today. And so feel free to go back and take a look at that, but I'm going to be sharing the bulk of it and the meat of it today as well. Now, for us as investors and syndicators, and again, for folks that come along and invest with us, having ample access to capital and the fact that banks love self-storage can only help us as partners. And lenders love self-storage because, first of all, lenders, their primary goal when they lend money is to get their principal back, and secondary is to make money, contrary to what most people believe. So what they're looking at is they're looking at the loss rate. And the loss rate on self-storage loans is the lowest of all asset classes, running at 1.1%. And again, as we're tracking all these, multifamily is 3 times higher. Apartments have a 3 times greater chance of having a loan loss or going back to the banks, going in default and foreclosure compared to self-storage. And in healthcare buildings, 6 times higher. So same when it comes to the default rate. Self-storage, 6.34%. The others fall in line just as the previous graph. So when banks are looking at investing in an asset class, and also especially their portfolio lenders who keep the loans on their books, they're looking at self-storage because they have a strong balance sheet with the more self-storage facilities they have on their balance sheet. And the feds know this as well because they track loan loss rates. And so when the banks are looking to get their money from the feds, from the regulators, if their balance sheet is chock full of self-storage facilities, then that bank has a very favorable credit rating and is very strong, and therefore they get the money that they ask for and continue to grow. So that's why another huge reason why we began to look into self-storage, because it's a little tougher to raise capital and to get banks to loan money on these other asset classes, because this is the asset class that they're clamoring for. And one of those reasons is because it has a low loan loss rate, because it's much easier for us to collect rent and manage the facility versus the managers and owners of other asset classes, because there's only 3 steps to getting paid every time in self-storage. And that is because it's built into the system. It's built into the industry, because we are industrial real estate, not habitational real estate. We are. Self-storage is industrial real estate, not habitational real estate. So we have the protection of lien laws versus eviction laws, which don't protect investors. The lien laws are in place to protect whom? Yeah, the tenants that live in the apartments and the rental houses. And so therefore it looks 180 degrees different in this asset class. If somebody doesn't pay, then by the date of the month in which rent is due, for us, it's on the 1st. We have a grace period until the 5th. On the 6th, then we can, by law, we can remove their gate code. So at our facilities that have a fence around it and a gate code, by law, we remove their gate code. Actually, it happens automatically with the software. And then number 2, guess what? We get to lock them out of their unit. Yeah, by law. We lock them out. They can't get in. It's a disc lock. Takes a grinder to get off. They can't come in there and just twist it like a free lock that they got with their luggage, or use a bolt cutters even. Now, you can't do this in apartments or houses if they don't pay. You can't go over there and lock them out of the house because it's habitational real estate, remember? And so step 3 in getting paid, in the process, in the lien process, is that if they don't pay after 90 days, we send them certified letters. We send a mail out their way, serve public notice, send email. And if we have not heard from them after 90 days, then we get to hold an auction. So we serve public notice of the auction, get in touch with the relatives, anybody and everybody that we can. And if we have not heard back from them, then we have the opportunity to auction them off. So many of you may have seen the shows, Auction Hunters, Storage Wars. Many of them are still on, very popular. And I don't mean to burst your bubble for anybody. If you're a big fan of the show, you may want to cover your ears. Okay, you ready? Reality TV isn't real. Okay, you can take your hands off your ears now. Don't mean to ruin it for you, but I got to say, folks, if all those things that they find, the treasures, the tool chest full of brand new tools and antique jukeboxes and pinball machines and gold bars and all that. Well, you would think that the person would come up with $75 if they're behind on their unit, rather than give up the $3,000, $5,000, $10,000 worth of stuff in their unit. But it makes for good TV, doesn't it? So here's what happens at the auction is the bidders get up to the highest bid. And once the gavel goes down, the door goes down, they buy the unit, they close the door, we put a lock on it, and now we just created a new renter once they have won that unit. And so sometimes they clean it out immediately, sometimes it's weeks, sometimes it's months, or they keep that unit at our facility and they buy stuff from other auctions in that unit. And they have units at many of our facilities that they are bidding on a regular basis. So the other good news is that it doesn't happen very often. We don't hold it every 90 days. We don't hold an auction every month. It's we wait until we're out of units, and we have a few of those left because most people pay. They don't want to lose their stuff. It's a rare occasion when they do. But the good news is that we have these lien laws that allow us to remove their gate code, lock them out, and then auction their stuff off to recapture our back rent and late fees. Because I got to tell you, in houses and apartments, when we go to court, all we would get is a little yellow or pink piece of paper, and they owe us thousands in back rent and late fees. Here, they only owe us for $50, $100 a month, and we get it back when we auction the unit off. So, I mean, I get 100% of the payment back, but I get paid 100% of the time when somebody leaves and they owe us money in back rent and late fees. So the good news is, the better news, the best news is that lien laws give us that protection as investors, as owners, operators. There are no courts, no attorneys, no collection services. We are the judge and jury, and we have by law the right and the ability to be able to do this. And that makes the difference, which, by the way, is the way it should be. We have a charitable component to our business. We build houses and we take people out of the mission field. But my business is not a charity. And you know what? I found my apartment and my single family house business becoming a charity because the courts were dictating that. So this is what I get back now. When somebody leaves, when they're done with the unit, that's what we get back. Or if they auction it off, they don't get their deposit back, by the way. They have to give us a deposit. And if they don't clean it out, then we keep the deposit. So this is what we get back almost every single time. So what don't you see here? Those of you that may be investing in other forms of real estate, or maybe actively investing in habitational real estate. Yeah, we don't have any of this anymore. So we freed up the future of our contractors, our maintenance folks, to find other career opportunities because it's a metal box on concrete, and we don't have all this. It used to cost us $1,300 to do a turn on our apartments. That is lost rent and late fees and the cost of repairs for doing all of these things. That was the average, and we thought we were pretty good at that time. But now, we replaced all of that and all of those folks and all those with this. It's a 200-mile-per-hour blower, and our manager or whomever goes in and blows the unit out, and we move to the next person waiting in line. And we do have a line because we're marketing all the time, and we're in those top 100 MSAs in which we have a waiting list. And so when we were looking back at our annual figures, and then once we got into self-storage and comparing the two asset classes, when we look at all the lost rent and late fees and all the repairs and damages compared to self-storage, our self-storage facilities, there was barely a blip in occupancy when somebody moved out. Our repairs, well, door springs, it's normal wear and tear and maintenance. It's $75 to fix the door springs about every 7 to 10 years. And then the rest of it was 5 minutes to blow the thing out. And we recouped our money in lost rent and late fees by way of an auction. So it's pretty clear which asset class was outpacing the other. And that's why we went full bore into self-storage. Also, the fact that it is, now I don't want to mistake this, that is not an easy business, because no business is easy. And there's some people that think so, and they treat it as a hobby instead of a business. It is a business. You have to walk the four corners of it, and you have to set it up with standard operating procedures, or SOPs, and systems, and the right people to run it. However, I will say that it is a simple, predictable business model. For the numbers and the stats that I just gave you, there's at least a dozen others that we follow and track. And we also know when we come into a market and into a project what the benchmarks are, how they will operate, because it's the way that we operate our facilities. And we have the history and the data in the industry and in our own facilities. And so for that purpose, it's not speculative when we come into a market for development or conversion, or even when we're buying an existing facility. So I learned a long time ago, by way of reading Michael Gerber's book, The E-Myth, that I did not want to be in the active income business, which is what I was in single family homes and apartments. I had to go out and find these facilities and rehab them and then rent them out. And then there was still more work to be done when they turned. Plus all the maintenance from shingled roofs versus steel that we have in self-storage, and all the moving parts, HVAC units, carpet, paint, you name it. And then just the hassle of the management of having to manage tenants, toilets, and trash, versus self-storage, which is, it's not 100% passive income unless you're investing as a passive investor. But as far as an active real estate investor, it's a heck of a lot more passive than on the habitational real estate side, because, as Michael says, systems run the business and we manage and tweak the system. So looking at the management of it, as I touched on earlier, you see this self-storage facility here. If you can see my cursor, there's a kiosk inside of that little unit there that's open 24/7 and allows folks to pay rent or rent a unit 24/7. Because we have the ability to do so. We offer virtual management. Remember, we have been touchless and contactless long before the pandemic, because our highest line item expense next to property taxes, so second in line, is personnel or management. To have somebody sit in the office and wait for somebody to come in, because it's unlike an apartment complex where our managers would sit there and they twiddle their thumbs waiting for somebody to come in and then show them around the unit. Writing letters and messing around with the handyman, keeping an eye on the contractors, the tenants, and writing letters for noise, and parking their cars on the grass, and for arguments, and their dogs, and everything else that goes along with that. Well, here they didn't have to manage anything or anyone. It's just a bunch of people's treasures stored in the units, and then we just had to keep up and collect the rent once a month, and then follow up with those that were behind. That's it. So we set up our offices to be virtual. When somebody walks in the door, this is the door frame here. We have 2 kiosks set up for 2 people to be able to rent a unit. There's a person that greets them by way of a video screen, and we have larger ones at most of our facilities that says, "Hey, if you have a question," it's a person that greets them when they walk in the door. They see them. They're located at the mothership at our call center. Say, "Hey, our kiosks are right here. Welcome to XYZ Self Storage. If you have any questions by way of the kiosk, I'll be right here and I can answer them for you." In this office and on this wall here, it has the various sizes and mock units of a 5x10, 10x15, 10x20 that shows them the size and what will fit into the unit. So they go over to the kiosk. They insert the driver's license. It uploads all their information by way of the barcode that is on the back, or the QR code, depending upon what state you're in. It pre-populates the lease. They pick the unit that they want from the map that is shown on the kiosk itself as to what's available. Insert their credit card, and they complete the rental, all again without coming into contact with another person. It gives them their key code. In many of our facilities, we have a key fob that gets them into their unit. So this is a key fob programmer right here. So depending upon the facility itself, how new the construction was and what we have in place, or they can buy a disc lock to put onto the unit themselves. And so they either have to have a key fob or a disc lock with us. They can't use the cheap free lock as well. And then they're off to the races. They go outside, back around to their car, go through the gate, and can get into their unit and then enter anytime they want. We also have these where we have a larger screen and kiosks set up for folks to be able to rent side by side with an aid of a person. And so after they're moved into the unit, a number of our facilities have the ability to. We have a lock on the back of of the door in their unit. They get in by way of an app on their smartphone. So they plug in their code, it unlocks the unit, and they can get in anytime they want, again, at 24/7, unless you have your hours set from 7 a.m. to 7 p.m., like this particular facility here. Everything still works with a manual gate code, but everything can also be done by way of a smartphone as well. Now, the benefit to this is also that our managers or supervisors don't have to go and put those red disc locks on and lock the units out. If somebody hasn't paid by the 6th of the month, the software recognizes it and it automatically locks the unit down, and the folks, our clients, can't get in to the unit until they pay their back rent and their late fees as well. Obviously, the access to our business and most people's businesses is by way of a website, and then the mobile phone and having a website that is responsive and mobile ready. So whether somebody's looking for a self-storage unit by way of their laptop at home, an iPad, a mobile phone, responsive websites give them the same ability to rent a unit online and then show up at the facility with their gate code to be able to get in. Again, touchless before, it was cool to be touchless. So I could get into the technology that has come into this industry by way of all the technology that is out there and available in the marketplace. But self-storage has benefited probably greater than any other real estate asset class because it is a low labor intensive transaction. People aren't looking for the school systems. They're not going to go look at each unit and layout and does it overlook, the lake, the pool, whatever that looks like. Self-storage is primarily a commodity. Is it close to home? Is it safe? Is it secure? Can I rent this unit now? And check this off my list, because that's all I need to do is get my stuff in a place right now and make sure that it is a place that is close to home. It is suitable, affordable, clean, and secure. So that, my friends, is why we love this industry. And that is also a reason why it has been so popular during a pandemic and utilized so much, and why it works so well during a recession is because we've seen all the markers and things that occur during a recession, as well as everything that happens during inflationary periods. When times are good, we buy more stuff. We need a place to store more stuff. Self-storage, the industry benefits. As we head into a recession, we see that over and over again, self-storage actually does better during a recession. We see the hockey stick effect, like we saw with the pandemic, as we head into a recession. And folks, depending upon where you're at and who you believe and who you read and what you listen to, we skipped a cycle with the last administration, and now we're going to be heading into a recession here. We don't know exactly when. Some people believe it is now that we're in it. But either way, the administration's printing money, and interest rates will go up at some point. And we're already seeing what's going on in the bond market, and we will soon find ourselves in a recession again. And I'll tell you, we are prepared for it because we are in the asset class that benefits the most. And so why? And again, I'm biased because I'm in the industry and I see it and I'm living it. But here are the top 10 reasons, and these are taken from anywhere and everywhere, including in our business, as to why we feel that self-storage is the asset class to be investing in, whether it's actively or passively. And one is because of high demand, and we're going to see an even greater demand as we head into the recession. There's ample financing available, even seller financing for folks that want to defer their capital gains, these owners that have paid them off or paid them down. We have a number of our facilities that are seller financed as well, which helps our balance sheet. High cash flow per square foot, as we've seen, it has a greater rental amount per square foot and a lower expense ratio compared to all other asset classes. Also, it is very easy to manage, as we had mentioned. So I hesitate to say easy, but we have the technology available. And as you have seen, our asset class is not only essential, but it is set up to be able to utilize technology without ever coming into contact with a person to manage it. There's multiple profit centers that you can add to a self-storage facility to grab more dollars and to increase the valuation of our facilities by way of locks, boxes, and moving supplies that we sell, rental trucks with a U-Haul, climate-controlled storage. We also offer specialized storage for wine storage, boat and RV with concierge services and detailing services. There's over 40 different profit centers that you can add to a self-storage facility, and depending upon the feasibility study that we do on the facility when we go into a market and a project, will dictate whether it makes sense to add record storage to this, to offer humidity and temperature control for wine, furs, art, and other collectibles. Whatever this market is needing, we will add it in terms of services or the business within the business, and have it run either by a kiosk or by way of a part-time employee that handles that side of the business. It is also extremely recession resistant. As a matter of fact, it's not recession proof, but it does very well during a recession. And rounding out my top 10, why I love it is because there's no tenants, no toilets, and trash compared to the other asset classes out there that you can invest in and that I have invested in as well. So that being said, we're obviously very high on the business. And here are the reasons why those of you who are looking to invest passively, again, very biased. I think that everybody should either invest in, whether actively or passively, into one vehicle that invests into self-storage. For active investors, I feel everybody should have at least one self-storage facility that churns out revenue during inflationary periods and recessionary periods as well, because self-storage, in terms of its performance, if we look back at 2020, the real estate investment trust self-storage was at the top of the heap. Industrial was second. Amazon and others that support Amazon are building warehouses like crazy across this country right now. And those were the only two sectors of the REITs that actually churned out a return last year. So for that alone, if you're looking at roughly a 12% return, even during the downtick when everybody was pausing, and we see that malls and shopping centers are at negative 30 or negative 40%. We're seeing a 50 to 60% swing in returns. Period. All the rest of the real estate investment trusts, multifamily, office, hotel, shopping center, posted losses last year as a sector. And also, you are in good company. Those of you that are looking to invest in or are already investing in it, Berkshire Hathaway, I think you're familiar with Warren Buffett's company, significant investor in the self-storage sector in Storage Mart, and his buddy, partner in crime in some instances. I shouldn't say that. That can be taken different ways. Mr. Gates is a friend and investing partner. Also one of the country's largest investors and one of the country's largest self-storage operators as well. So you need to ask yourself the question, if two of the considerably the greatest investors in the country are doubling down in self-storage as we head into this next economic cycle, it may be something that you should be looking at as well. National Real Estate Investor Magazine, some of you may be looking into this as you are preparing to invest, showing that private equity is pouring into self-storage deals right now as we head into the next cycle. Why investors are attracted to this type of property, investment management systems, covering that, investors realty. Shame on them. Unglamorous self-storage industry prospers for investors and individuals. And yes, it is. Motorola's founding family, they know a thing or two about investing. They're putting all kinds of cash into self-storage as well. And I am never professed to be the smartest person in the room, the smartest person in my industry. But I look to those that are, and quite honestly, I'm not looking to go upstream or to carve my own path. I want to be in the asset class that is doing the best, that gives me the best chance to be able to perform. And that's the one that I'm doubling down in. And so we've spent 15 years perfecting our management systems and development systems, syndication, our financial services arm. And we are doubling down in the self-storage business and have been for many years. And we don't celebrate pandemics. We don't celebrate recessions by any stretch. There's a lot of awful things that happen to people and businesses in general during a pandemic, as we've seen, and recessions. But we know that if we are going to live to fight another day and continue on to support our family and our staff, as well as our missions, then we need to be in this asset class and we need to do it better than anybody else. And so that is why we've chosen self-storage. That's why we're building facilities in Phoenix, Arizona, Mesa, Arizona. And we're offering usually above average returns from what we see from our competitors out there in the marketplace. And by the way, I don't promote. There is no promotion on these webinars. And so I'm showing you some of the projects that we've worked on with our folks and projected returns. I'm not going to share with you our projects that have produced great returns for our investors, but only an example of the things that we're investing in and what we're doing in the marketplace right now. Built a state-of-the-art facility with all the bells and whistles in Ramsey, Minnesota, which is just north of the Twin Cities. We like the Denver market very well. We also opened the doors on this development project in July of this year and is leasing up. It's almost, that opened in May of this year and is approaching 70% occupancy in just that short amount of time. Our Brandon self-storage facility, Brandon, Florida, just outside of Tampa, also approaching stabilization about a year and a half ahead of time. We have a conversion that we bought an industrial building in Orlando and converted it with our joint venture partners, which is leasing up nicely as well. And again, we have over 41 projects all across the country that we're working on. We have 2 that are active and available for investment, and we also have a fund that is available to invest in as well. And so if you have an interest in looking at the asset class, then by all means, go to passivestorageinvesting.com, because we have some educational materials to look at, do a deeper dive into the industry. And then obviously that is where you'll see some of the other projects that we've worked on in the past is also our available offerings as well. And then if you want to get in touch with me to talk about what it's like to invest with us, or if you have any other questions or would like to talk to me about anything in the industry, except for free coaching, go to scott@selfstorageinvesting.com, scott@selfstorageinvesting.com. Send an email that does come directly to me, and we can schedule a time to chat. All right. So with that, gang, we will turn it over to questions. And let me see. I believe that I can see that. Do you guys want to handle the questions and ask those, or do you want me to hop in the chat in the Q&A and ask those? Let me know what you'd like to do.
I'll go through and ask a couple of questions. Really good presentation, Scott.
Thanks.
That really opened my eyes to self-storage and what a valuable asset it can be for your portfolio. So a couple questions we have here. We have about 5 minutes, so we'll run through a couple of them.
Sure.
What metrics do you use to decide to build climate versus non-climate controlled units?
Yep, good question. So anytime we are looking at a project to embark upon, we're going to do a market study, a feasibility study. And it's a good thing it just went out while I came back here. We're going to do a feasibility study. And so we hire consultants to do these studies for us. And they're going to take a look at the market to see which has the most pent-up demand by way of occupancy or vacancy, and then rates. And so that's going to determine our unit mix of what types of facilities to build, as well as if we have single story and multiple buildings, which ones we're going to add temperature control to and which we aren't. Really, we're looking at, can we afford to build a building and then insulate it and put in the HVAC systems? Is there a large enough delta between the temperature controlled units in the market, the rates, versus non-temperature controlled units? So that's probably the simple answer.
Okay, awesome. So what is a better investment, ground up or value add?
Well, what I should have stated, Evan, there's a disclaimer here that all answers that I give could start with "it depends," and they do. Generally in a development project, ground up, there's going to be a greater return on your investment. You start with a piece of dirt and you put an income stream on it. By the time it's stabilized, historically we have better returns on that. It takes a little longer, maybe 4 to 5 years, to be able to get it through titling, permitted, get it built, and then stabilized, versus our projects in which we're buying an existing facility. Well, again, that really depends. Anything can happen with a development along the way, but also our projects that we buy that are existing, how far do we go to create value in it? Are we just raising rates a little bit and raising a little bit of occupancy, or is it a complete turnaround and repositioning of a facility where we're spending some money on it to reposition it and maybe do a refurbish and rebranding, but the upside is significantly different, and we're getting even the same or more returns as in our development projects and doing it in a shorter time frame. So those projects are harder to come by, as you can imagine. And so we like to have a healthy mix of value add existing facilities, especially those that we can buy that have like an acre, hopefully more, or 2 that we can add additional buildings onto. So we get really the benefits of both. But those turnaround projects we like because they're short term and they're higher IRR for our investors typically because of shorter time frame. But the development projects are where we get anywhere from a 2x to a 3x multiple, as you saw in some of the examples that I've given on our projects. So all of that, a long-winded answer to say, once again, that it does depend, but we have a healthy mix, and our marketing funnel is filled with both types of projects. All right, and if I can add one other thing, conversions are really development, but if we buy an existing a shell, a grocery store that went vacant, shorter time frame to build, obviously, because we got a shell, we're just putting walls and doors in, maybe a new roof and an HVAC. We don't have zoning and permitting, and so in 6 months, we could be up and down in this project and have the doors open and the lights on in a conversion. So that is really the asset class or the sector of our asset class that we like the most is conversions, when we already start with zoning in a shell in place.
Awesome. So we have an anonymous attendee here that says, I'm close to retirement and looking for sound passive income. and they're looking to invest in self-storage, what interest rates typically do you see in your industry? And can you receive monthly dividends?
Mm-hmm. So in terms of interest rates right now, well, again, the asset class is the darling of lenders, commercial lenders, because it has such a low loan loss and default rate. And so we've seen sub-3 interest rates on some projects. The pension funds, insurance companies are crazy for this asset class as well. Most of the loans that we're closing right now are right around that 3.75%, 3.625% interest rate right now. And of course, that also depends as well as on the syndicator, the company, the partner, the project. There's bridge financing out there that gets a little more pricey in that 5 to 8% range that some folks put on while they're developing, and then they put permanent financing on. So there's blended rates out there, but traditional SBA rates that we're seeing right now, sub 4, and in some instances we're seeing sub 3% interest rates. In terms of monthly dividends, that depends upon the syndicator. That depends upon the promoter and the project. Most project you'll see out there start usually immediately or within the first quarter. They start sending out dividends with the preferred return, and that's what we do on our projects as well. And others, they may do a little more runway, whether it be 6 months or so to get some cash flow coming into a project. So I can't speak for the rest, but in our projects, we're starting typically no later than the first quarter.
Okay, awesome. Well, guys, it is 1 o'clock. Scott, if you want to put your email in the chat box for everyone,
Yeah, I can
just
do
so
that.
they can, reach you directly, guys. If you have questions about self-storage, Scott here, he knows it all. So I highly recommend, reach out to Scott if you're interested in learning more. Check out his website. Send him any questions you have. Also, come to our grand reopening event next week, August 3rd. Like we talked about, guys, register. Spots are limited, but it's time to get back out there, start networking, start building your connections. And again, reach out to Scott if you have questions. Scott, thank you so much for coming on today. We really do appreciate it. Every time we have you on, I learn so much. I love watching these webinars. So thank you, Scott, and thank you everyone for attending.
All right, my pleasure, Evan. Thanks so much. Thanks everyone. Take care.
Bye, guys. Thank you.